Hello students and welcome to your economics class. In this video we will continue with the same chapter, that is government budget. But here in this video the objective is to study about the components of the government budget. That is the component of government revenue and the component of government expenditure. Now let us understand what are the different parts of the components of budget. The budget has two parts. One is the revenue, that is the income of the government, and another is the expenditure. The revenue or the income has again two parts, that is revenue receipts and the capital receipts. Similarly, the expenditure has two components, that is revenue expenditure and the capital expenditure. Now let us understand what do you mean by revenue receipts. Revenue receipts are those income of the government which do not create any liabilities or which do not reduce the assets of the government. So it is that income of the government which does not create any loans for the government in the country, or it is that income which do not relate to any sale of the government property. So the sources of revenue receipts are the revenue from taxes and revenue from non-tax revenues. Now let us understand what are the different sources of revenue from taxes for the government. There are altogether six sources from the taxes, that is income tax. Income tax are those tax which are imposed on the income of the people. The second tax revenue is the corporation tax. Corporation tax are the taxes imposed on the profits of the companies. The third one is the custom duty. Custom duties are those taxes that are imposed on the imports and the export of the commodities. The fourth one is the central excise duty, and excise duties are those taxes which are imposed on the production of the commodity. The fifth one is the service tax. Service taxes are those taxes which are imposed on the services provided by the hotels, provided by the banking and financial services, etc. And the last tax revenue is the expenditure tax. And expenditure tax are those tax imposed on the consumption of the commodity. Now let us know the non-tax revenue. There are four non-tax revenue. The first one is the interest receipts. So sometimes the government give loans to the state government, to the union territories, and also to the foreign government. So those government have to pay interest on the borrowings or interest on the loans taken from the central government. So those interests are the income for the government. So that is what is known as interest receipts. The second one is the dividend and the profits, and this is another income for the government that is received from the public sector companies. The third one is the revenue from the service provided by the government. That is the income that the government receives from the administrative services provided by the government employees in the form of fees, uh, in the form of license fees. Not only that, the fines, penalties, etc. And the last non-tax revenue is the grant in aid. It is that voluntary contribution made by the individuals, private organizations, and the government and the foreign governments to the government for specific purposes. Sometimes during natural calamities, there are some contributions made by the celebrities, private companies, and the foreign governments. So this income comes under the grants in aid. So these were the different tax and non-tax revenue that comes under the revenue receipts. Now let us understand what do you mean by capital receipts. Capital receipts are those receipts which create liabilities or which reduces the assets of the government. It is that income of the government whenever it sells its property or shares in the market, or whenever it takes loans from the public. The different sources or the different examples of capital receipts are recovery of loans and advances that are taken by the state government, uh, that is taken by the union territories, foreign government, etc. The market loans is another source of capital receipts, that is the loan taken by the government from the public. The third one is the special deposits in the form of investment with the government, that is made by the non-government provident funds, funds of LICs, etc. The fourth one is the small saving in the form of post office saving account, time deposits, recurring deposits, etc. The fifth one is provident fund. The sixth one is external assistance in the form of loans received from foreign government and international organizations like World Bank, IMF, Asian Development Banks, etc. And the last one is the disinvestment proceeds, which means the income that is generated by the government whenever it sells the shares or debentures of the government companies. So these were the different sources of capital receipts. Now let us move to the another component of budget, that is the expenditure. There are again two components of expenditure, that is the revenue expenditure and the capital expenditure. Now let us now talk about the revenue expenditure. It is that expenditure which do not create any physical or financial assets, or which do not reduce the liability of the government. So it is that expenses of the government which are incurred for the day-to-day working of the government. The examples of revenue expenditure are in the form of expenses made by the government in the form of salaries, pensions, interest, subsidies, grants to the state government and others. So these were the different sources of revenue expenditure. Now let us talk about the another type of expenditure, that is the capital expenditure. Capital expenditure are those expenditure of the government which create physical assets or financial assets, or which reduces the liabilities of the government. So it is that expenditure which increases the property of the government, or which reduces the loans of the government. So this expenditure are in the form of expenses that is made by the government when it is purchasing lands, buildings, machinery, equipments, or while it is purchasing shares. So it also includes the expenditure whenever it gives loans to the state government, union territories, foreign government, etc. So these are all the capital expenditure. So in this video, we studied about the components of government budget. The government budget has been divided into two parts. One is the revenue, that is the receipts. Another is the expenditure. Again, the receipts has been divided into two parts, that is revenue receipts and capital receipts. Similarly, the expenditure has two parts. One is the revenue expenditure and another is the capital expenditure. So these were the different components of the government budget.